In the latest development, the Bombay High Court has directed the Customs Department to explain through an affidavit how its September 2024 show-cause notice raising a tax demand of $1.4 billion from Skoda Auto Volkswagen India was not barred by limitation, which means why was this company not singled out in the tax evasion case? That's the question that the court has asked the tax authorities to explain. Now, this comes after the German auto major has called India's demand for $1.4 billion in tax, that's about 12,000 crore rupees, exorbitant. In its notice, the Indian Customs said the company provided misleading information concerning its imports. The Customs Department has also claimed that the company misclassified its imports of Audi, Skoda and Volkswagen cars as individual parts instead of CKD or completely knocked down units, thereby paying significantly lower customs duties. The main contention of the company was that the department could not have raised the tax demand after all these years. Remember, this has been on for over 10 years now. The company has contended that it has been paying tax for over a decade under the individual parts category. To now suddenly say that tax ought to be paid as per the CKD or completely knocked down unit category is not fair. The company's counsel has argued this. The customs case is built, it says, after it concluded a thorough investigation that the company has to pay tax as per CKD category. Now, the German group led by the country by Skoda Auto Volkswagen India has been accused of deliberately misleading the customs authorities through its mode of import of parts as individual units in different ship containers as opposed to the component of the completely knocked down unit, which attracts higher import duty. So, what are these duties specifically? Well, the difference is fairly large. CKD units or completely knocked down units, which are cars which have the chassis and the engine built coming into the country, attract a tax of 30 to 35%. But Volkswagen declared it as imports as separate components in different shipments and paid the duty only on components, which is as low as 5 to 15%. And this data is as per the Customs Department. So, it seems that Volkswagen Group has chosen to declare imports as individual components and paid lower taxes and lower duties as opposed to completely knocked down units, which the Customs Department says that it indeed did import into the country and evaded taxes. Now, on the issue of singling out Volkswagen, well, there is also a court paper which has been accessed by news agency Reuters that suggests that Kia, another car maker, in fact a South Korean car maker, had also been pulled up for similar duty evasion reasons, and that Kia corrected its course after being pulled up by the tax authorities, and hence it seems that Volkswagen is being singled out.